Hi everyone, today we're talking about Alibaba and Alibaba in 2018 towards 2019, 2020. Um, my previous experience with Alibaba is that I was invested in Alibaba and I sold out about $200 per share a long time ago. This was probably towards the back end of last year, I think it was. I basically sold that out because I thought it was at a good price at the time and to go invest in something else. But a lot has happened with Alibaba since, and we're going to talk about that. So at the moment, I don't currently have any positions in Alibaba, but I will say my thoughts on Alibaba towards the end of the video, and if I'll be buying any shares into Alibaba. Now, at the moment, Alibaba is sitting about $120 per share, which is the lowest it's been for a very long time. In fact, I think it's near the bottom of its 52-week low. It's very far off its 52-week high, which was about 217-ish, just give or take, from the top of my head. Overall, though, since its IPO, which it IPO'd about $100 per share, it was up to about 100% return on its IPO, which obviously it's slightly gone down since, but it has had a pretty good run up since. And then since about August of 2017, the stock has kind of flatlined since. It's had a couple of times where it's gone up and down. So at the moment it is at a very low price, and if it is a good price we'll talk about that. But the big thing as well to think about is that the China trade war has affected this stock big time. It has took a big effect on it and caused probably one of the main reason why the growth is or the percentage return on this stock is pretty low so far this year. And when you compare this stock to Amazon, which I think is probably the easiest competitor to relate to, obviously that Alibaba is a Chinese company, its main source is from China, and obviously Amazon is from the US. I think Amazon's return is nearly 60% this year. Alibaba is pretty much zero, or it's 1 or 2 or 3%, something like that, single digit return percentage. So when you look at how much Alibaba is growing compared to Amazon, which is pretty much the same, maybe even slightly more towards Alibaba, and you get that return from Amazon compared to Alibaba, I think that's the first sign to say that it's undervalued. Obviously Amazon is at a P of about 100, and that Alibaba is now down towards, I think it's 35, 40, somewhere around that region. So there's definitely a big massive difference in the PE with a better growth in Alibaba. Obviously I think if you watch my videos, I'm not a massive fan of Amazon. I think it's overvalued right now. Good potential in the future, don't get me wrong, but it's definitely overvalued right now. We look at Alibaba and from the PE and the growth, you can, from my opinion, you can see that Alibaba is a better buy than Amazon, which is one of its main competitors, the more company that we can relate to, because it's pretty much the same company in the same sector but in a different country. Now the growth potential on Alibaba is where it gets really exciting. Overall the company has grown revenues by 58%, and this year it's expected to grow somewhere around 62%. It's got its earnings on Thursday morning, which will be interesting to see, and at the moment it is trading around a forward P of 20 to 22, which is really good. You know, compared to Amazon, I think that's the forward P on that is still like near 75 or something like that. So you can see that the forward P on this stock is miles better than what Amazon's trading at, and the growth has been really good. I think Alibaba is the third biggest cloud competitor behind Amazon and Microsoft right now. Even though it only has like I think 3% of the market, it's grown at 101% rate, has a cloud market for Alibaba, which is good. It's making a lot of purchases, a bit like Amazon. It's sacrificing a lot of its profits and being profitability to try and grow its revenues, which is really paying off as what we can see, and it looks like it's going to pay off in the future. One of the biggest problems that I can see for Alibaba is the government in China. We've seen how much it's affected Tencent banning one of the main products. They can be a polite way of putting it, a pain in the backside. So that's one problem that I see with the Alibaba being in China compared to the US, but everything else is there, is potential. The CEO of Alibaba, his plan to get the growth is exceptional. Really good CEO to have there, how he's planning to take the company forward. And at these prices, Alibaba is very, very cheap. With the amount of sales that it's had, the people selling out the stock, a lot of the people get affected by fear very quickly. Eventually they will run out in the stock. And eventually you'll have the hardcore long-term investors there, which will hold the position and carry on growing. So Alibaba, it must be very close to bottom, getting to the bottom now. And I think it's really been controlled by the short sellers at this time because of this China trade war. As a long-term hold, it's definitely a really good long-term hold to be having. We can look at the earnings per share, the growth that it's going to have in there, the revenue, the sectors it's in, it's growing, its business purchases. It's a really good company to be invested in, and hopefully it'll also internationally expand to grow more revenues. It's definitely one of the best holds that I can see in the next 5 years. I'd probably put it as the most undervalued stock right now in the stock market. So it leads me on to whether or not I'm actually going to be buying any shares in Alibaba. It's very hard for me at the moment to buy shares in Alibaba. It is one of the companies I'm watching very, very closely, and at some point I'd like to get into Alibaba. It's just that I like the Boeing investment. I like my FedEx investment. And then tech side, I've got PayPal's payment. I won't class that as a technology. I'll class that as a payment side of it. And then obviously I've got Microsoft, which is a cloud-based company, as well as obviously all the software side it does. And as well as having Microsoft stock, I've just invested into Facebook, another technology side company. So I've got them two at the go at the moment, and the other ones I personally won't see myself getting into Alibaba until I potentially sell one of those stocks, or I have more funds available to be putting into my brokerage account to be invested in Alibaba. But it's definitely a stock that I'm watching very closely, and there's a good chance I could be buying some shares. It used to be Google on top of my to buy list at the moment, and I could have bought on a dip, which is on a little bit of a slight dip right now. But Alibaba at this price has taken over Google for me, and it's just a company that I would like to get into at some point, and it's definitely a stock that I would recommend as a buy. My price target on this would be to sell Alibaba around about, probably, I like to do a long-term hold, but if it shot up to 200 and probably 40-ish, 50-ish, I think that's a very fair value price for this stock. So that kind of shows how much potential I think this stock has to go at the moment. But Microsoft, for example, I said I'd sell that at 110, but now it's got to that, and the growth sectors that Microsoft is pulling out, I'm holding that longer now. So it swings around about. So I'm not in the stock yet, to be fair, but it's definitely a stock I would like to get in. So guys, that's my opinion on Alibaba right now. A really good, strong buy in my opinion. And I'll try and make another video into a couple more Chinese stocks, because there's a lot of Chinese stocks on sales right now. But guys, give the video a like, subscribe, and I'll see you on the next video.